Hey guys, how you doing? Justin here with BrowardPowerLister.com and Galleria International Realty in Fort Lauderdale. I want to talk to you today about the home buying process, and more specifically, 3 things that your agent needs to include in your sales contract when you do make an offer in and do decide to purchase a home. Not all contracts and offers are the same. There's a lot of things that can go wrong if the contract isn't prepared properly by your agent. And by having these 3 key things included in the contract, it will protect you from the most common issues that will really screw you over, basically, and put you on the hook financially, either to have to move forward and buy the home if there are some major issues uncovered, or incur additional expenses that you might have not otherwise intended on paying. So the first thing that needs to happen is, in the contract, you need a good inspection period. Now, in the contract, there's already a clause for the inspection period, but the length of time can vary. So your agent needs to put the right length of time in there. I usually recommend 2 weeks. That gives you enough time to bring the inspector in, review the report, and then if need be, negotiate with the seller for a credit or a reduction in sales price. Or if you determine that, hey, there's too much wrong with this place that I didn't realize was going on here, you can cancel. And that's the whole point of the inspection period. And then you can get your deposit back subsequently if you cancel before the end of that inspection period. The second thing that needs to be added in, potentially added in, is the appraisal contingency. Now, the appraisal contingency is not included in the core contract. It's something that your agent would add in. And what that does is it protects you in the event the bank comes in. If you are getting financing, the bank will send an appraiser in to determine if the value of the home is in reality the same as what you and the seller have agreed to for the sales price. They're going to send an appraiser in, they're going to look over the comparable sales, they're going to look over the property, and they're going to decide whether or not they think it's worth the same amount of money, or if they decide that maybe it's worth a little bit less. If they decide it's worth a little bit less, and you do not have the appraisal contingency in the contract, as the buyer, you have to make up the difference. You are in it to win it, and you have to bring that extra money to the closing table. You're on the hook for that difference. It could be $5,000, it could be $10,000, it could be $15,000. So that's why it's important to talk to your buyer's agent about this, especially if you're not in a financial position to shell out an additional $5,000, $10,000, $15,000, or whatever the case could be, to cover the difference between the sales price and what the bank says it's worth. Because the bank is going to give you a loan. They're going to give you a percentage loan based on loan to value. It might, let's say they'll give you 90%, and then you have to bring a 10% down payment. But they're going to give you 90% of what they think the home is worth. If they say it's worth $10,000 less than you've agreed to pay, you now have to pay that 10% down payment off of the value they say it's worth, plus the $10,000, unless the seller agrees to lower the sales price, okay? So what happens usually in this scenario is the buyer and seller can negotiate and come to some middle ground. This is often what usually will happen. But because both parties legitimately, you went into contract because you want to get the deal done, right? Both the seller wants to sell, you really want to buy. So if you could come to a reasonable middle ground, then you'll do that, and your agent will help facilitate that. But the appraisal contingency is your insurance policy. It's your backup in the event that the difference is too much, you can't come to an agreement with the seller, and you need to cancel the contract on the basis that it didn't appraise for the full amount. So that's why it's important to add that in. The only caveat is sometimes the seller won't agree to that. If they have multiple offers coming in, they may not agree to having the appraisal contingency in there. They actually have to agree to that. So, but if you're bringing a strong offer in, they haven't had a lot of offers, and you add that appraisal contingency clause in, there's a good chance they will accept that. The third and final thing that needs to be included is a small clause at the end that says that the seller will close out and pay for any expired permits on the property. So a lot of times what will happen is when the title company is researching the property, to determine if there are any liens, if they're to determine, excuse me, if there are any permits that are expired, to make sure that the property is really free and clear. One of the things they will look for are open permits, and the way to one of the things that have to be done to close out permits often is either paying fines or sometimes you even have to remove something that kitchen cabinets have to be torn out. All sorts of things can happen with that. So that clause protects you. It says that the seller will close out the permits at their expense. So you're not on the hook. If you don't have that clause in there, you could really get screwed. So those are the three things that make sure that your buyer's agent adds those in. And I hope that helps you guys. And I'll talk to you soon.